Most investors believe they're diversified. They own multiple ETFs, several stocks, maybe even a dividend fund. But here's the uncomfortable truth. Many portfolios that look diversified are actually concentrated in the same few companies, and that creates hidden risk. Good morning. Let's talk about false diversification because it's one of the most common structural mistakes I see. Here's what it looks like. You own FEV and S&P 500 ETF at a total market ETF at growth ETF at maybe a tech ETF feels diversified, different tickers, different names, but open the hood. What are the top holdings? Apple, Microsoft, Nvidia, Amazon, Google repeated over and over. You don't own four different strategies, you own the same exposure four times. That's concentration disguised as safety. And it becomes dangerous when one sector drives most of your portfolio. Here's the midpoint reality check. If tech dropped 30%, would your entire portfolio feel it? If yes, you are not diversified. You are leveraged to one theme. True diversification spreads risk across W sector C asset classes, economic conditions, income sources. Owning more funds doesn't reduce risk. Owning different exposures does. Here's the psychological trap. When something performs well for years, investors stack exposure. It feels smart, it feels logical, it feels safe until it corrects. And then the decline feels unexpected, but it wasn't unexpected, it was concentrated. So here's what to do. First, look at your top 10 holdings across all funds. Are the same companies repeating? Second, check your sector allocation. Is one sector overweight beyond 25-30%? Third, balance exposure intentionally. That might mean two dividend focus funds, defensive sector C bonds, depending on your stage. Real asset exposure diversification isn't about quantity, it's about distribution. A well-diversified portfolio may not feel explosive during one sector boom, but it also won't feel catastrophic during one sector correction. And durability is the goal. Let me ask you something. If you had to explain your portfolio's sector breakdown right now without looking, could you? If not, that's your starting point. Structure creates confidence. Assumption creates fragility. Build structure. That's how you protect long-term wealth. If this helped you rethink your portfolio, subscribe because we build durable investing here, not hopeful investing.